Good morning. It is Tuesday, June 9th, a little after 10 a.m. I got caught up being caught up, and now we are ready to rock and roll. Going to do mainly a question and answer session today. Look at a couple of charts and really consider what's going on with the market being down a little bit today, what, 400 or 500 points on the Dow. I just wanted to revisit this chart that I showed last Friday. So we knew that the relative strength index on the weekly chart had been approaching overbought. And the last time that happened, last two times that happened, we got a sharp decline. I want to focus on this 2018 meltdown. So you had the long rally, followed by the volatility event that we forecast here, and made an excellent trade on, where many people made well into the hundreds of percent on the trade. I only made like 50% because I have to be the last one in, and then I was also one of the last ones out, so I had to round trip it a little bit so everybody else could get their trade on. But look at this rise after the initial correction. The weekly doesn't quite get overbought, right? The market anticipates the move before the traditional signal gets all the way there. And then look at this rally from pretty much all of 2019, especially after they bailed out the repo market, right? Because it had been topping. And the SP 500 follows this too. We'll show that in a second. And then it came down. Then weekly RSI got to about 60. This is from before the close on Friday. And now we have the market turning down. What could happen? So we go to our trusty trading view. Pop in SPY. And we take a look at our chart. So here you have the trend line that I drew, and make it a little bit more perfect there. And we've never really gone below the trend line. We've approached it a number of times. And really, this trend line, there you go, should be right about there. It should hit that first spot. There we go. So we've gotten to the trend line. A couple times, well, a few times, right? On the daily chart it touches. Then we broke through it for a hot minute. Again, if you use the daily chart, it looks a little bit different. The power of a giant screen. So look, at the bottom, 2009. The first test. Right? Test it, doesn't break through. Test it, doesn't break through. Test it, doesn't break through. And here, it breaks through, but rallies immediately. So the question that we have to ask is this a violation that it's going to cause or lead to or be a precursor or be a harbinger of a bigger correction? right? So the area that I have been keen on has been from here, 2016, not only the low point, but also the low point that was right at the correction, right at the election. I have postulated that this area of resistance became an area of support. So about 208 on SPY. Imagine if the SPY got all the way down to 208 from 321. It's about a 35% drop. We've never seen that before. Oh, wait. We just did. Then the Fed pumped $3 trillion into the economy. And now they're running out of juice. Why? Because as we talked about at the time, the Treasury actually changed the law, and the Congress changed the law, and then enabled the Treasury to give the Fed money to backstop that massive bond buying program, corporate bond buying. The Fed had never really bought corporate bonds before. The reason why the Fed bailed out the corporate bond market is so all these big companies didn't go bankrupt in the short run. Basically financed them through a couple of years of coronavirus. Many, many corporations pushed their debt maturity levels off a year or 2 or 3 or 5. And the companies with good credit longer. So there was a huge amount of corporate debt issuance over the last couple of months. That prompted me, once I realized that the Fed, or once I got confirmation that the Fed was going to actually buy those bond ETFs, we got into the high yield bond fund for my shares, which we'll look at in a minute, the Fallen Angel bond fund, and the high grade investment bond fund. So we're going to take a look at all those in a minute. But what do we do about the stock market? I'll tell you what. I believe that we're going to get this correction. And I think we're going to get all the way to here. Now, I don't know that it'll be a straight line. It'll probably hit support, bounce up, go to the next one, bounce up, go to the next one, bounce up, go to the next one, bounce up, and go through. So if I had to make a prediction, I'd say that we're going to see around low 200s on the S&P 500. I'm comfortable saying that now. And I think that we will completely erase the Trump rally. And there's a possibility that we go down somewhere in here, that it actually stops somewhere in here. And because I wanted to honor my fantasy baseball league, I thought that I would put some commentary in. I wrote this back in the 80s. There you go. There you go. That was something I wrote in the 80s for some little band. I think there's a very good chance that we end up in here, right? I don't think we get below these major support levels, especially this huge Fibonacci level. I think it's, excuse me, this one. This is the retrace. But in this area. So what do you do if you're a stock investor? Well, we covered the 3 scenarios on Friday again. If you're bullish, if you think that all that money the Fed printed and the millennials and everybody else is going to hold up, that 401k plans aren't going to get cashed in, that unemployment's going to come roaring back. If you're bullish on the economy in a V-shaped recovery, and you're bullish on on the stock market being able to maintain the highest valuations in history, or second highest, depending on how you want to measure, then probably you need to start buying in this first box. I'm not going to. Or maybe you buy in the second box. This looks a little bit more viable. Maybe I'll sell some puts in here. Maybe there's a couple of favorites that I would buy, because that looks like some jitterbugging, and that's a little stronger. Look at all those. That's a confluence. Look at all those lines. Is it amazing to you how all the lines kind of pile up, and that there ends up being action a lot of times? Action. I'm probably not likely to buy much of anything, though, until we get into the 270s on SPY. And again, we'll want to be watching our overbought signals down here, right? Relative strength index, money flow index. Remember what we said about money flow index and relative strength index. On the way up, if the money flow index is below the relative strength index, that's a sign of weakness, underlying weakness. Why? Because this is volume weighted. So when this number, when RSI is higher, that means that it's advancing despite a low volume, right? Compared to this, which is advancing and is adjusted for the low volume. If volume was high, then this would be higher than relative strength index, right? Hope that's clear. You can see that a little bit better now. So if the money flow index would have been above the RSI, I would have felt a lot better about that, because then you have underlying volume supporting the move. All right. So I have spent a lot of time, and especially the last few weeks, getting told I was wrong about things. We've already violated the uptrend by a little bit. It came roaring back, but we did violate it. Just barely. I believe we're going to violate it again more. I think we're going to set a new low. But again, if you're more bullish than me on the economy and the stock market, and you don't think politics can get in the way, then maybe not. Then you have buy zones that you can incrementally add to your positions. And don't buy every time it goes down 1%, right? That becomes a martingale thing, where you're just doubling down and doubling down and doubling down and doubling down, and eventually you're out of money. Space out your buys to major support levels. Measure momentum when you do it. If all these things are heading straight down and MACD doesn't look like it's about to reverse, then be careful. And what do we say about MACD on the weekly? It could go a little higher, but not much. Right? MACD really spiked. If you look at it on the daily chart, right? Because this was huge, you'd expect this to be bigger than normal, right? But as I talked about for the better part of 2 years, 2.5 years actually, I talked about it. And I even wrote an article a long time ago, I think it was in Market Watch, might have been Seeking Alpha. After that first flash crash 4.5 years ago, whatever it was, I wrote in that article, there'll be more 1,000-point down days. There'll be more flash crashes. And I told all of you, pull up the videos, I said it on air, that we would see 2,000 point down days. And how many of you could wrap your head around that at the time? I'm telling you right now, we are going to see more 1,000 and 2,000 point down days. The economy is brutal. What are these people going to do in the next month or two? What are they going to do? If they have a 401k plan, they're going to cash it in. That's what happens. That's what happened in 2008 and 2009 for about a year. People started cashing in their 401k plans by summer of 2008, and they weren't done until the first quarter 2009. We haven't seen that yet. So how low does it go? You have my guess. I'm guessing right in here. Low 200s on the SPY, maybe a little lower, right? Maybe all the way down to 170. And there's a worse scenario out there. I mean, take a look at the monthly chart. I mean, it could go lower. I just don't think it's too likely. The whole 700-800 level area, I don't think so. But this level right here, about 130-ish on SPY, that is certainly not out of the question. And so rather than being predictive, we just need to at least understand what the possibilities are, right? If you understand what the possibilities are, you can build around it. So the economy is horrible. There is no V-shaped recovery. A few people have started using the phrase W-shaped, and I kind of said that 3 months ago, is that we might get a little rebound over the summer and then a dip back down into the autumn. Well, what we're finding out is that the first wave of coronavirus has stopped receding and it's welling up again. And we know that the hospital systems are preparing for a second wave in the autumn. So what we are really seeing is the first wave not completely ebbing and the second wave coming in on top of it. We better hope we get lucky on coronavirus because we have not been very diligent. We had 3 or 4 weeks of lockdown, 5 weeks of lockdown, and then people went nuts. It's going to matter. It's going to matter. So I am cautious here. I don't want to buy a lot of stuff. And if you're not thinking that this jitterbugging right now is dangerous, then I don't know what kind of risk management you're doing. I really don't. I'm down to 50% stocks, all covered for the most part, and I bought more hedges yesterday. So S&P comes back a little bit today on some sort of an announcement, and everybody's giddy again. when the 401ks start to get cashed in, things are going to get rough. How low does it go? Your guess could be as good as mine. I mean, there's a pretty good chance that this level holds. That'd be very bullish if this level holds. If it doesn't really go below 260-ish, right? If it holds in the 270s to 260s area, you can almost connect these areas. If it holds in this area, that's very, very bullish. That means a lot of things are getting better quickly. So you'll have to measure them when the time comes. HYG. So this is the bond fund that I would tell you, if you wanted to lighten up on something on one of your bond funds, this is the one you'll lighten up on first. Upside of about 5% more, right? But if the economy gets rough, it can come down hard again. So I think over the next, it's already down a little bit today. Over the next several dollars, you need to trim HYG. And if you're looking to raise capital and you love some of your stocks that you don't want to sell, then maybe you go ahead and book your 4 or 5% gain here. Right? You just made 3 years worth of money market money. So again, a lot depends on your asset allocation and how invested you want to be, how long a time frame you're looking after, where you're at financially. There's a lot of factors. So when people give you these blanket advices, the problem is they don't know who you are, and I don't really either. So I try to give you the scenarios, and you need to apply it to your situation. But I think that you can start trimming HYG soon. It'll be the first one that you sell because that's the one that doesn't really get direct Federal Reserve largesse. It's Angel, right? Angel really is getting more Fed benefit here because most of these bonds qualify for the Fed support. So I think you can hold. I know that'll really be a monthly here. Yeah. I think you can hold this one all the way up to around $30. But we're clearly in. You could sell anywhere in that area if you wanted to. I would sell near the top end. Save that. Did a couple charts yesterday and I didn't save them. I didn't auto save fast enough. Go back to HYG. This has more history. And you can realistically drop this all the way down to here pretty easy. Because I do think it'll continue to there. Where in here, I don't know. More of a game time decision. LOQD. And look at that. LQD is clearly in a It's a safer bond fund. Oops, that's not what I wanted. I do that once in a while. I hit the wrong square. There we go. Look how fast these rose. Yeah, that's just amazing, isn't it? The movements of this market have been nothing short of remarkable. So you have to be careful. Something should be screaming out to you, the structure just isn't right. And it's because it's not. All right. So I was doing some research on stocks. I'm writing an article for Seeking Alpha. Should be out today. It's titled, Cut These Dividend Stocks Before They Cut. And on the list is Wells Fargo and Exxon and several others. So I'm looking for companies that haven't cut yet and have rallied recently. So we take a look at stock rover, and it's come off its bottom. Wells Fargo has come off its bottom quite a bit. So if I'm a Wells Fargo shareholder and I see this, right, going all the way back to here, I'm probably getting out of Wells Fargo right now. They're going to cut their dividend. Stocks going to go back into the 20s. Might go into the teens. Remember when I said GE, when it was about the same price, to go into the teens and stay there a long time? And I got hardly mocked. Where is Exxon? Let's find Exxon. There you go. If you own Exxon, dump Exxon. It's going back into the 30s. Might go under 30. Eventually, it will go under 30. I don't know imminently, but eventually, I have a price target of between $10 and $20 a share on Exxon. They are borrowing and have been for several years to pay their dividend because ain't nobody buying their assets. The price of oil is going to be between 40 and 60 a really long time. Maybe for a hot minute, if there's a war, it'll go up above 60, but probably not much. So I was ranking these by Altman Z-score. I took a look at the REITs, and there are several REITs that people ought to sell. How do I get there? There we go. So went through the REITs. I'll tell you what, Simon Property, they're going to cut their dividend. They've already signaled it. It's almost guaranteed. So their FFO is about $11. Their dividend is about $8.40. Their FFO is about to come down to below $8.40 probably. My guess is they cut their dividend in half, but they might cut it 75%. During the financial crisis, they cut it down to almost everything, right? So some of these other ones I've marked off. I don't like Regency. I don't like SL Green. I don't like Federal Realty. Some of the ones I like, some of the industrial ones, right? Some of the specialties, but there's not a lot of REITs that I think you're getting a great deal on right now. I mean, you're looking for a yield, and the only ones that have huge yield are kind of in trouble. Now, one that I'm looking at, and I don't know what I want to do with yet, is Ventus. I have to read up more on their portfolio, but this could be one that we want because I think that healthcare facilities get money from the government. So we have to, try to figure out in our mind if that's worth the risk. I'm writing an article about Iron Mountain right now. It's called Iron Mountain into Molehills. So you know how I feel about this one. Iron Mountain's going to have to cut their dividend at some point because their legacy business is shrinking and they don't have a shot in hell at competing in the digital record space. I mean, they're competing with Microsoft and Amazon and all these entrenched cloud companies. So Iron Mountain spent a lot of money, borrowed a lot of money to build out their data centers. They're just going to have to sell them because their salespeople suck. How can I say that? Because I do channel checks. When I research a company, this is one reason why I don't pump out 10 corporate company analysis per week like some of these other jokers. I spend time, lots of days, making phone calls and reconnecting with people that I know have information on these companies. Iron Mountain's in trouble. And I recently saw it recommended 2 or 3 times on Seeking Alpha, and the people did the typical regurgitated pretend data analysis, and they're going to get people crushed again, just like they did going into this crisis. The only thing that bailed out a lot of these analysts is the Fed, because they didn't see the correction coming like we did. The Fed bailed them out. This is your chance to be a seller of a lot of stuff and get half your money back, or 60 or 70 or 80% of your money back, because everything in the S&P 500 went up. Everything. Just saw this note. 100% of S&P 500 stocks or something are up, like are positive for the last 10 weeks or whatever. Some of them aren't positive by a lot, but some of these are in bad shape. UDR looks rough. This one, again, would probably have to rely on a bailout by the government. Don't like some of these residential ones. Taking a look at all the missed rents. How do they handle that? Do they take on debt to pay the dividend? I mean, that's just a horrible idea. So this is an opportunity for these companies to right-size their dividends, but then they're going to lose, so they can invest the money into more real estate. And in the long term, that's probably good. But in the short term, if they get their dividends cut, the investors run for the hills because dividends, give me my dividends. So all the dividend chasers are going to run away. They're going to run away from Iron Mountain. They're going to run away from Simon again. They're going to run away from a bunch of them. So if you are blinded by the dividend yields in the REITs, you're 50-50 to get your REIT cut at this point, to get your dividend cut at this point. Because the office REITs are in trouble, the commercial REITs are in trouble, the mall REITs especially, and a lot of the residential REITs are in trouble. The one out in Baltimore, Camden, I did a lot of research on Camden, and they must not, are they not in the SP 500? Oh, Well, Dividend Sleuth put me on the Camden, and I spent 2 days reading everything I could find on them. Camden's interesting to me. When they bottom, we might want to buy them, and they'll go back to bottom. So, all right, we had a question about BP. Right. So they've had a pretty good rebound off the bottom. You know, roughly a 50% retrace. Actually, closer to. Let's take a look at the fibs on this one. I bet they're right at a fib level. All right, so let's play with charts. Not that far back. All right. Let's take a look at that bottom, that top. There you go. That sets your baseline. Pay attention how I'm doing this. So there's your baseline. Way, way, way back. That bottom, that key top. Right? Now, do your extension. Go to the same spot, and then to the next bottom. There you go. And it gave me that is the proper color that I use. There you go. So when you take a look at this with just very long-term, right? Very long-term fib levels. Look at that. Did I say it would be right at a fib level? I just eyeballed it, I could tell. It's right at a fib level. So it either has to go all the way to here and then probably to here, or it's going to turn back down. Have they cut their dividend yet? If they have not cut their dividend yet, I would sell it. If they've already cut their dividend, I think you can hold it up to the green line, probably, give or take, and maybe to this area. So let's take a look at BP. Have they cut their dividend yet? Does not. Dividend yield 9%. Yeah, they have, and I don't see the negative number. They usually have the this would be a negative. See how that one's a negative? So in the S&P 500, dividend growth is negative 3% already. Think that one through. Dividend growth in the S&P 500 is negative right now. They haven't cut yet, so they have to. I would probably sell it. You're right at that fib level. And I just eyeballed it, right? And we can do the other measures. I would think there might even be a confluence there. So we can go from this low back up to this high. Look how it topped out right at a fib level. Okay. Then we can do an extension. Go low to low. I usually go low to low. Low. To high. To low, which was again at a longer level. Yeah, I mean, look at that overlap. That's fairly strong. So if you want something more recent, I haven't color coded these yet. We can go from this low that high. Right, look at all that strength that stopped it from going down. And now look at all this resistance that's starting to pile up. Again, this is a little bit off because I'm not using, I could use a shorter chart probably. Go from this low, that high. This is actually isn't going to matter much. Oh, yeah, a little bit. And look at, you got 3 lines right on top of each other here. And they could be right on top of each other. I mean, it's just my imperfection, right? But then that's a bunch of little support, a bunch of resistance levels. So if they had already cut and absorbed that pain, I would have said they probably climbed this wall of worry. But they haven't cut yet. So I don't like that. I would get rid of it. That's just me. Right? I think a lot of oil folks have gotten their chance. I mean, look at this level here. I mean, you're for sure running into structural resistance. And maybe you get a buck or two more out of it. All right. Let's look at a couple of questions. Any thoughts on REITs? Okay, I just want to REITs. Well, I don't know anything about these guys. I don't know anything about these guys either. It's not a healthy chart, right? What do these guys do? The Geo Group? Is this a REIT? I don't know. Yeah, it's a prison REIT. Oh, that's right. Who knows, man? That's a political football. I don't know that I want to do. If you're swing trading it, fine, but I gotta think that there's something negative for them coming. If you bought it down here on these bottoms, I'd probably book the profits. You know, doesn't mean you have to sell out 100%. You know, you sell 2/3, keep the last third. I like KMI. I think it's going to get all the way up here. You know, I don't think I'd buy it until it got to around 15. I need to redo this chart, but in general, I know the fundamentals of KMI well enough that if you own it right now, just hold it. If you don't own it, you can probably buy it 15-ish. Melly. Oh, Makka Libre. Oh, look. Somebody asked me about that last week. You asked me about the same stock 2 weeks in a row. Cut that out. Look at the chart. That doesn't, that's nonsensical. Double tops and then it goes nuts. It's going to get back to here. I'm telling you, I wouldn't buy it unless it was in the 400s. Makka Libre in the 400s. When it gets closer, we'll chart it out. Yeah, Pioneer came off their bottom. Again, if you really want an oil stock that's in shale, I think this is the one because they're super low in debt and they have great shale. So, do we want to play with Fibonacci levels? Let's play with Fibonacci levels. Let's say first Fib retracement off of this bottom. All right. So those are your big levels. I'm getting Robinhood alerts on my phone. I signed up for a Robinhood account the other day. Here. For 54 minutes ago. Choosing stocks is hard. Muscle arm emoji. Get started by checking which stock prices are changing the most. Okay, hold on. But wait, there's more. What else did they send me? And then I just got this one a minute ago. COTY is down 11% today to 553. So I haven't put anything in my watch portfolio, and I'll do that soon. But just in seeing my son's alerts, I'll tell you what, I think that Robinhood's going to tell everybody to run to the other side of the boat. Sell all of these and buy all of those. That's what's going to happen. I think a lot of people get shaken out first. Bottom, top. And that was a relevant bottom right there. There you go. Let's color that one properly. And color this one properly. So the green one will always be the starting one, and then it'll be the blue one, and then it'll be like a purple one. So as we get shorter and shorter time durations. But I'm really just trying to find the 3 most relevant time durations. And it's usually a long macro, which would be in Elliott wave parlance, that would be your I think primary count, whatever the long-term one is called. I'm relearning Elliott wave again just so I can talk like them. Like I said, I think this is more effective. But remember, they incorporate fib, like Avi. Not all Elliott wave traders incorporate fibs, like Avi does. But most Elliott wave traders incorporate all this other stuff that's down here, right? So you're looking for a lot of pebbles, right? A lot of breadcrumbs lead in the same direction. When you just throw a whole bunch of breadcrumbs into the wind, well, how does that help you? But if there's an actual trail, and sometimes you got to bend a little further to the left, a little, take a step left, take a step right to pick up the breadcrumbs, because they don't always perfectly match, right? They don't, but they make some sense. So let's take a look at this here. So with Pioneer, MFI was higher than RSI. So that's underlying strength, which is what I just described, is they got good assets and low debt. So if you want to hold an oil stock longer, this is probably the one to hold. That, and if you want a major, it's Chevron and Total. Total and Chevron. Because Total is notoriously cheap, right? They've been doing economic deals as a rule for a very long time, and Chevron's right behind them. Chevron's been better managed than Exxon. The one thing I will tell you about Exxon is they're ruthless. About Chevron is they're ruthless. And if you don't think that Chevron has led to people dying and being maimed and getting sick, then you're not following Chevron. Chevron's an evil company. Evil. No ifs, ands, or buts about it. That's why the only major I would consider owning is Total. Because the way I look at oil is it was necessary. We had to have it for a long time. So you can't call a company evil just because they're in oil, because we needed it. Right? These people who, basically blanket pillory, green, blue, the oil companies, they're evil. Well, not automatically, not just because of the oil. You used it, I used it, everybody used it. And for a long time, there weren't alternatives. So this real long fib level here, you know, I tell you what, I think it's 120-ish. I think you can own these guys to about 120. So if we're going to do a sell box, I don't think we even need to do more recent stuff. And we could. This bottom. That top. And then this extension from that bottom to that top. Make sure they get real close to matching. Back down to that bottom. So let's look at the daily chart. Wow, what a mess. Doink, doink. Those are the new ones. And they could have some relevance because maybe the whole equation has changed on these stocks, right? They fell through the floor. The floor is now the ceiling. Can they get to the ceiling? I think so. Can they get through the ceiling? Could you? Right? So I think you got a couple dollars to go on Pioneer, especially since I'm sure there's going to be some missiles thrown at Iran at some point. Might even break through. So if you want one that might break through, I'd say, like I said, Total and Chevron, Pioneer, like those are like the only three oil companies that I can even try to say something good about, right? So, and it's because Pioneer has the great rock and low debt. So, and they have pipeline access. All right, what else we got here? Yeah, I told everybody, right? Nicolai. Where did I tell you about Nicolai? Right? I told you guys in here. I didn't buy it either. But we were on it. So I don't know. Now it's like Tesla. It's got to become a real company now because it's valued the way that Tesla is valued. At some point, a company gets valued on its profits. Just throwing that out there for anybody who didn't know that. Short term, stock market is a popularity contest. Long term, it's just going to weigh the profits. All right. ERT. I don't know what they do. What does VRT do? Is this healthcare? Just one of those vaccine stocks? Come on, ARA 49er fan, let's go. You asked about this. What is VRT? All right. Somebody asked about the Zweig breadth thrust indicator positive last week. I talked about breadth. The market has breadth to the, it's just so extreme. You should never have every stock in the S&P 500 up for 10 weeks. It doesn't happen. We went from breadth improving to everything has to remain perfect. There's nothing to improve. I mean, all you can do is blow into the bubble more, blow into the balloon. Hey, that balloon's blowing up. Keep blowing. It's starting to stretch. Keep blowing. It's starting to make noise. Keep blowing. If you blow, blow more, what happens? So, GLD is too high. We talked about that too. I wouldn't mess with it up here. Maybe I sell puts in this region. Maybe I buy it down here. GDX, on the other hand, is sexy to me. I don't know how that moved so far over. I mean, it's so close. I mean, like I told you Friday, you can sell puts on this one. Just might not be perfect. If you have too much cash and you want to sell some puts on something, and you don't have an overwhelming amount of GDX in your portfolio, right? Go ahead and sell it on this guy. We don't want to go that far out. There we go. Things could change by then. All right. So, yeah. Look at that. That's big. That's a big deal. It might not go below that. I mean, it sniffed it and it bounced up a little bit today. But if we get a stock market sell-off in general, it'll come back into this range. Yeah, I can look at Sonico. Hold on a second. This save. Okay. All right, Sonico. Canadian oil. Yeah, I mean, this looks just like the Pioneer chart, right? My concern about all Canadian oil is that it's hard for them to get at the market and they take a discount. And that's not going to change because Keystone's not getting built ever. When, and you need to get used to when instead of if. When Joe Biden is president, Trump's going to lose by 10 to 15 million votes. It's going to be a big loss. I mean, I told you 2 years ago it was starting to go that way, and a year ago I said it was starting to go that way, and now I'm telling you it's gone that way. There are so many people that hate him, and so many Republicans, especially from the George W. Bush era, who are coming out against him. President Trump doesn't have a chance. I have over $2,500 in bets on this election now. I already won 6-1 on the whole Biden thing because I was able to get 6-1 odds on Biden in January. So I'm just telling you, the pipelines aren't going to get built. If Trump couldn't get it done, and Congress is going to keep throwing up roadblocks and then lawsuits. So the problem with Canadian oil is just the whole shut-in problem. I think this is its range, right? You're in the area that you should sell it. I mean, can it go a little higher? Sure, it could go a few dollars higher. But if you bought it down here and you're afraid of a correction in general, look for an exit strategy. Maybe you sell covered calls at the money if you think that it's going to like go down and then go back up, right? If you think that a stock is going to do something like this, what the hell? Oh, I'm bad at this, aren't I? You think it's going to go like that? There you go. That's what I was looking for. If you think it's going to do something like this is the right time to write a covered call, right? I want to own it long term. It pays a dividend. It's getting a little technically overbought. Market's maybe a little rough. If I sell a covered call to like 30, get a buck or two, that's up near, that gets me, if it gets called away, that's near where I wanted to sell anyway. If it expires, I just made a buck or two and I collected a dividend and now it's going to go up next time, right? So this is, when you think something's going to do this, sell a covered call in here. CTL. Just one fib level I put in here. I don't know what this one is for. Let's start over. All right. Relevant fib levels for these guys. Post-merger. When did they merge with level 3? 2 years ago? So where's a relevant low? Here's a relevant low. Relevant high. And new low. Man, look at that. Look at this line. The bottom there on that fib level. How's that? Crazy, right? It happens over and over again. That's why we use them. All this stuff in nature is just weird. All right. I think you can run pretty far. I wouldn't sell it below 13-ish. Ultimately, I still think they're an acquisition target. And I think that what you were seeing with the streaming is that these guys are just going to start charging more for access to the internet. The government will get in the way of that. So can these guys get back up way up here again? Nah, I don't know. I don't know. Thought they could. But, the thing with stocks like this is that if they go, don't just sell them because, oh my God, I'm up now. figure out why the stock's going up, because the market's telling you something. Did they suddenly become a lot more profitable? Did you miss a headline? Did they sell something? Is the takeover rumors getting stronger and stronger? I do think this is amazing that it just kept playing at this fib level. So that's really strong support in the nines, nine-ish. I think for sure it gets up to here. Probably gets to around here. I don't know if this makes any difference or not. Here, here, to here. Yeah. Do you guys like that I'm trying to use the same colors over and over again? I'm going to do that legend here soon. 13-ish, if you're trying to exit, is probably a good spot. If you're waiting for a breakout, if it goes through here, you could get all the way up here. I think that that's pretty reasonable. 3 fib levels right on top of each other. So that's been a spot that it got to a number of times. And go back. Right? See where all that consolidation was? So I think 17-ish is probably pretty reasonable too. So if you want to put a sell box, I'd say I think that's your sell box for them. So companies like CenturyLink, they benefit from 5G because they have to provide the fiber optic background. These guys are like 5th or 6th in the country in fiber optics. Yeah. So they already fixed their short-term cash problem when they cut their dividend. So I'm not too worried about that either. And their revenues aren't really impacted. In fact, they might show better revenues. That's not true. People aren't going to have a 5G for like their home computer. Anybody who is a heavy user, anybody who's a heavy user isn't going to do that. We're in AT&T, right? AT&T is our everything play. So AT&T is the one that I own for that whole area. And then, by the way, they own Warner Brothers. So relevant high, relevant low. Change the color right away. There we go. Do the trend-based extension. I like to go low to low. Oops, that's wrong. Going backwards, but that's okay. There we go. So AT&T is at a very long-term level right here, and we'll see if it goes through. I come back down temporarily, but as you can see, it really never gets too low. I still think that you have major breakout working here. Don't know when. That's out to the weekly. I mean, it got to 43 before and it stopped. Three fib levels. Look at that. 1, 2, 3 of them right at that level. So I would think that you're probably looking at 43-ish for AT&T next year, the year after. And then if they sell Warner Brothers, off to the races. If they keep Warner Brothers, they'll probably chop around and drift higher. Or drift lower, because I don't know if they can execute on Warner Brothers. I think it's an asset for them to sell. In fact, if they get to 43-ish and there's not good rumors of them selling Warner Brothers, I'd probably take my profits at that point, or at least sell a lot of covered calls again. So yeah. Is there a shorter term one? I guess right here, top to top, we could do. Oh, what just happened? All right. That's enough of that stuff. All right. Anything else? Yeah, I think the AT&T dividend is plenty safe. Yeah, they might sell the satellites for DirecTV, or they'll repurpose them. I don't know how flexible those satellites are. I don't know what they can do. All right. Vet. Menfeed RT. Yeah, I asked about Vertiv Holdings. What is it? I don't know. Looks fishy. All right, let's call it a day. It's been an hour plus. Everybody have a great rest of the day. And I think be careful out there. Micron. Okay, we'll finish on Micron. Yeah. Yep. So for the folks who bought it down back here, now you have to ask yourself the question, should I sell it? Crazy volatile. I think the trade war gets worse in the next couple of months. I think the economic reality sets in. I think that anything that's had this big rally on hopium, you can probably trim. I know Micron has a lot of backup, a lot of business already lined up for the next couple of years. So the fundamentals are fine. But how does it trade is the question. And I think the answer is with a lot of stuff, right? This kind of looks like a head and shoulders, right? Oh, funny looking head and shoulders. Right shoulder forming. Yeah, I'd probably try to buy it lower. I'd sell a good piece of my position. I don't think I'd sell out, right? But you know, it doesn't hurt to sell a third or 2/3 of your position on anything ever. If you're up big profits, you decide how much you're going to sell, based on what is your long-term plan. Your long-term plan, and look how they bottomed out right at a fib level. I don't know. I just think it's interesting that that happens over and over again. It's almost like something in nature. So they just broke through a couple levels here. They said maybe this market has one more puff on the cigar. Low to low. So just broke through a pretty strong resistance level. Next stop is about 56. And there's a lot of action right in there, right? So I think that you could sell covered calls on Micron right now, anticipating that curvy shape, that cup shape, the swoosh, the Nike swoosh. It's going to come back a little bit and then go back up. Ultimately, Micron can get way up here, 85-ish. But I don't think for a couple years. So pretty big resistance. Got through a resistance, got very big resistance coming up. Have a hard time believing that it's ready to break out. Think it comes back. Get some consolidation back down here in the 30s. And if Micron gets into the 30s, Kirky. Probably gonna do some buying. That's where I want to buy. Really. Come on, man. Oh my God, I feel like I sound like Joe Biden there. Somewhere in here I want to sell. Somewhere in here I want to buy. There you go. So there's your chart for Micron. There's a link. Since I got it up, I'll put that one right into the VSL. All right. All right. You're killing me, man. SSRM, I don't know what that is, so we're probably going to ignore it. Oh, mining. It's either going to retrace right about now, right? See that structural area here? It's either going to start drifting back down or it's going to break out. I don't know anything about them. MFI is falling off the cliff right now, though. That would scare me if I'm trading that. So, doesn't look like it's ready to reverse either. RSI started to go up though. Maybe that leads it. I don't know. I don't know where you bought it. So hopefully you didn't buy it up here. All right, we're done.